Yo, what's good? It's your bro Lo, and I'm bringing you guys another saucy trading video. Now today, I just want to go over a little simple approach, very transparent. Not no, 1 to 100, 1 pip type trading strategy video. No, none of that. Like all these other gurus that they be doing. No, none of that. This is gonna be very transparent. It's simple for me, but it might be simple for you too. And I'm just gonna give you guys something that you could take for this week. A little gift from me. You might know this already, and you might not, and you might need to hear a little bit of stuff again. But I'm gonna give you something right out of my trading book, my trading journal, my trading plan that I do, step-by-step approach that I do before I make a certain decision in the market. So with that being said, right, I just want to say that I'm not a financial advisor. I am a regular trader, regular guy giving you non-financial advice. Okay, so if you end up liking something from this video that I give you, and you end up taking it for yourself, and you end up going to smack an old lady for $5, and you take her purse and all that shit, I have I have nothing to do with that. Okay, so with all that being said, let's get right into the video. So I'm gonna just go step by step to make it a little bit much simpler to note down. If you want to take notes, go ahead and do that. So let's get started with the video. So let's just go with this text note real quick, and let's do step 1. So step 1, you want to understand. Damn, I can't spell. Y'all see that? Understand the behavior and structure of the pair that you're looking at. Okay, so of the market. Okay, but really of the pair that you're really looking at right now, because every pair is kind of different. So let's say we're on S&P 500 right now. Okay, before I do that, higher time frame wise. Okay, so what I do is, before I make decisions, or before I do my analysis, I always start off with the higher time frame, of course. Okay, it's some people that want to go right to the 15-minute, 5-minute, 3-minute, 1-minute. Okay, that's on their personality, but I know a lot of people that done that I've seen over my time of trading SMC that's now profitable. They had to switch up from doing this, just going straight to the 15-minute, 5-minute. I could just get my analysis from there and then go into the 1-minute and do that. They now use the higher time frames, and then they scale down all the way to the 5-minute, 3-minute when the whole context starts to come together. Okay, so if you do this now, I'm not gonna say you're gonna switch up and change, but I'm saying this is just a part of your where you're at right now, and you might end up starting to really analyze the higher time frame. So let's start off with the higher time frame. Higher time frame wise, like if we look at S&P 500 right now, this is all I see S&P always doing. Even other indexes, right? You have a little impulse higher retracement, and then a little retracement afterwards, and then you constantly higher highs. You know what I'm saying? Sometimes they ain't even like this, but as you can see, that's what S&P is kind of doing, right? It's not as pretty, it's not as clean as this right here, but you guys understand the point, right? So looking at this, right, understanding the behavior, every time S&P runs liquidity, it goes higher, right? A lot of pairs does this, but you can see it really clear on this. Look, liquidity low, comes into an area of discount, and then runs higher, right? Area of discount, right? Liquidity low right here. Okay, runs it, runs higher. Okay, look, once again, low, runs it right here, goes higher. Okay, low, came into a deeper discount right here, and now it's running higher. Okay, so I understand the behavior of the market. Let's say we didn't see all this. Okay, now excuse me, if you guys don't understand premium and discount, now if you've been trading SMC for a while, then you should kind of understand this already. But for you newbies, I'm gonna just go ahead and do this real quick to make it simple. Okay, it's a basic 50%. You just get your fib and draw out the 50% of your fib. Okay, 50%, just the 50%, not the 618, none of that. Okay, it's basically just you're starting from a low to a high, right, of a range. Okay, and then the blue, not the blue, the black is your premium. Okay, this is premium. All right, and the blue is discount, right? Under 50% is discount, above 50% is premium. So you only want to sell in premium and you only want to buy in discount. Okay, that's just the basic thing with premium and discount. So I hope you guys understood that. Okay, so looking at S&P 500, right, we understand the behavior, right? The behavior is this, what's going on right here. Okay, structure wise, what is it? It's bullish. Okay, we're in a bullish order flow, right? We have higher highs, higher lows, higher highs, higher you know what I'm saying, pull back, you know what I'm saying? So higher highs, higher lows. Okay, so when we're looking at this right now, right, what exactly will we do here? Do we want to buy when it's up here? Yes, no. Yes, no, we don't want to really buy when we're up here based off the higher time frame. Now when you go to the 15-minute, 5-minute, it's gonna be discounts, and even though it's in a higher time frame premium range, it's gonna be discounts in here on the 15-minute 5-minute lower time frames. Okay, but I mainly want to look at the higher time frames because this is what the big institutions, the hedge funds, this is what they base their trades off of. This is where the big money is at, right? They're not on the 1 minute, 3 minute, really trying to move the market off of that. You know what I mean? Right? Now, the lower time frames, they build up to this, but this is what you really want to pay attention to and build context off of. I'm not trying to call tops or bottoms or anything, but right now it's showing me it's bearish because look, it broke this structure right here. If I start scaling down to the smaller time frames, you know what I'm saying, it's gonna look pretty bearish. I want to sell until we get down to here, or maybe the 50%. I don't know. You know what I'm saying? It's just the concept of where's the draw. Okay, so I think US 30, I was trying to sell it to get down to a discount, which I was, and I got stopped out and missed a good move because my stops were a little bit too tight. If I would have swung it, then it would have been a clean trade, but I'm going off of what we're doing right now. So let me get back to what we were doing. So looking at this, right, that's where I want to get to. Okay, so let's go ahead and close that out. Okay, so as you can see, price came into this daily open, right? This was my draw. First it was here. Okay, so I'm selling right on the lower time frames to get to there. Okay, let's see if there was a setup. So it was a setup here, right here. You have a stop hunt, right? You have a break of structure, okay, it didn't break structure. So this would have been low probable, but you can see that if it did, it would have gave you sells here. You had some sells right here. So as you can see, came lower. It did come into the open. No, I didn't come into the open yet, but it did run this low right here and gave a slight move back up. But since it already came to this draw, what else am I draw to now? I'm not completely bullish because guess what? It didn't break this high. I'm looking at this area right here. I'm looking at this area here, right? Okay, so you can see that we broke structure. We took out liquidity here. Let me move this area of discount. Just know that we have our premium and discount. You understand that, right? Okay, let's get a little bit closer, right? We're still in our premium range, right? Premium above 50%. Okay, we came to our first draw on liquidity, which was here. Okay, here's a little reaction that you had at that little small higher time frame daily down candle right here. So remember that reaction right there, that was inside of there. So we have that. Okay, now we push lower, we take out stops, didn't break structure completely, mitigated something in here, came into this FEG. It doesn't have to come in directly into this order block. You just come into this little range right here and then go down. Okay, there we go. Came up, took out liquidity here, broke structure here. So let me mark it out. Broke structure. Okay, closed below that structure, came back up, created liquidity here. Okay, it ran that, came into the order block. This could have been your trade right here. Okay, boom. Stops above here, and then targets at this low right here. 1 to 4, easy 1 to 4 right here. If you would have held runners, then you could have held it to get down here, but you would have got stopped out at break even after taking a good amount of profit at these lows right here. So that could have been your trade right there. Let's see. Okay, it's coming lower. There's really nothing I see that's super clean. Maybe on like the 15 minute or whatever, but I'm marking out. I want to kind of stick with daily 4 hour, 1 hour, 15 minute PD rays, up candles, POIs, you know, points of interest. And then, you know, I scale down to the 15 minute and try to get really good trades off of there, right? So as you can see right here, right? Let's say for this example, right? You have a stop hunt. Let's go to. Now I wouldn't have taken this right here because this is more of a hindsight-ish type of deal, right? But you can see the same thing right here. Look, stop hunt right here. You would have been paying attention to this range here. Okay, it would have played around with you a little bit, but look, context is still bearish, right? Until we get to that draw, right? This could have been another trade. Now this would have been like a more of a B type setup, so I would have risked a lot less on this type of setup because it didn't really give much liquidity to take out, like right here, right? I like to see liquidity being taken out into my higher time frame PD array. So as you can see right there, this would have been a 1 to 5. It would have played with you a little bit right here, would have dropped down. You probably would have took some partials right here, or you probably would have got knocked out at break even. If you would have held it, then you know, it depends on your plan if you wanted to hold during all this, but I probably wouldn't have held. So that would have been a break even trade or a trade that somebody else probably would have held. So with that being said, yeah, okay, so we came lower, right? Now we're coming into areas of discount. Okay, so that was our daily order block that it came into. It came into that, right, and reacted right here. Now if we would have came off of this and we came into this, I really wouldn't have taken this trade right here. I wouldn't have taken this trade anyways, because we're reacting off of this higher time frame daily order block. And once we came off of that right here, this daily order block, these highs would have been my drawn liquidity to be taken out. It would have been my drawn liquidity, but as you can see, it didn't do that. Okay, because look, if you look at it, right, it came lower right here, stop hunt into that daily order block, and then it started pushing higher, right? So I would have thought these highs were going to be ran, so I wouldn't have taken this anyway. So let's go on and take this out right here. Okay, so as you can see, we started having real aggressive price action through this daily order block right here. Okay, so once we started having this, right, it's starting to come lower. What are we paying attention to now? Okay, we could pay attention to that 50% of this, which is this area right here, right? It didn't get much reaction, as you can see. And then we're paying attention to this down candle that took out stops. It's probably something inside of these wicks right here, right? So we're paying attention to that. Okay, but as you can see, we're not getting much reaction, right? We don't want to call bottoms because we're coming into this area of discount. We don't want to try to just jump into the trade, you know what I mean, unless we're willing to swing it, like really position swing it, you know what I mean? So when we came into here, right, it's no reaction. So I'm looking, right, okay, now the thing is, if we're having this much of an aggressive price action, right, let's pull this out of the way. Okay, where is the current draw on liquidity now? Okay, this low, right, this low. What's below this low? We have a mitigated bullish order block. Okay, right, we know that looking at the higher time frame, we're having a retracement and we're coming into this higher time frame PD array. Okay, would a hedge fund take this trade right here? Would they take positions right here? I think they would, you know what I mean? Because look, when you look at the market, we have highs coming into a discount, right? Come into a discount right here, go higher. Come into a discount, it went higher. But this was still unmitigated, so it came into a deeper discount, right? And now what would be what happened? Let's look what happened. Okay, so I called out a trade, a position. I didn't call it out, but I gave analysis that I wanted to take on this trade. So once we came into this higher time frame order block, right, which was our drawn liquidity, this was sell side liquidity to be taken out, right? So this was the draw when we were pushing through here, right? first we had an order block right here, but since we had that aggressive price action, what is price trying to get to? You know what I mean? These lows right here. So I'm looking for these to get taken out, right? What's our next draw on liquidity? This right here. So you can sell until we get into here. But since we're at a very deep discount, let's say if we draw our fib from right here to up here, okay, discount is right here. Okay, so once we were into here, yeah, you got to be careful with buying, you got to be careful with selling still, because we're at discount, right? But you know that you want to take out this because of the aggressive price action. And once we broke this, what could we come to? Look, this is after we take out this low, our next draw on liquidity, where we think potential draw liquidity is like what, 28 points away, right? So you got 28 points to catch to get down to here that you could sell if it gives you a nice setup on the lower time frames, right? So you're just following where the train is moving to. So now that we came into where our draw liquidity was, which is this bullish order block, now I want to see what price does and be more on the bullish side, because we're at discount, right? So now that we're at discount, let's go to the hourly. Okay, we don't want to scale down right to the 1 minute. You know what I'm saying? We don't want to do that. We want to kind of slow our roll a little bit. You know what I mean? Paint the picture slowly. You know what I mean? Make sure all the paint lines up, all the context lines up. So as you can see, we have this up candle. It came down, right? Okay, came down, right? And now we aggressively push higher. Look how we at that engulfing right there. Now this is one type of candlestick pattern that I love, because the engulfing basically is a BISI, which is buy side inefficiency, sell side imbalance, right? The opposite, say you have a up candle and then a down candle that engulfs that up candle, that's a SIBI. Okay, this is why I like the engulfings, right? So what it did was it left FTG right here. So that just tells you that, you know what I'm saying, it's an aggressive move. You don't want to see no choppy type moves up like this while you're trying to look for buys, right? We tapped into here, right? We don't want to see no type of price action like that, because then it would just show us that it's not much momentum into that, and price can come lower and then maybe go higher. You know what I mean? So we got that aggressive price action right here. Okay, we broke structure here. Okay, and this was our trade here at this, back to this bullish order block. Okay, so you could have had a trade here. I was looking for this trade, but it came around Asian session, so I wasn't able to take it. I didn't have to scale down lower, you know what I'm saying, and try to get the most minimum stop loss, because I know this could be the beginning of the impulse back up to the higher, back to the highs, right? Because we're at this area of discount back to this bullish order block, right? So this would be my trade. Now, where is the next draw on liquidity? If we're coming from this discount, we came to mitigate here, where's the draw on liquidity, right? Can y'all tell me? I know y'all see it. I already got it marked up, right? Now I have this marked up, but also back to the highs. Why back to the highs? Because we understand the higher time frame behavior and structure of this specific pair, right? So every time we came into an area discount, what did we do? We run higher. Discount, run higher. Discount, run higher, right? So our first draw on liquidity would be these highs up here. But they're so clean. They're very clean. This is resistance. That's where we're looking to get to. That's the draw on liquidity. What's above that? Once we push through here, resistance. Once we push through here, resistance. Okay, those are all of our draws on liquidity right now. Okay, so now that we have that understanding, say we missed this right here, okay, that's fine. We still know what price is potentially drawn to, right? So now we're looking for what areas of discount to get in on lower time frames to push up into our draw on liquidity. So let's say we broke structure here. Okay, look at this. What's this? On the higher time frame, this is a 4-hour down candle. Okay, you want to pay attention to higher time frame PD arrays. So now that we're looking at that, right, let's scale down. Let's see what's going on in this little fractal. Okay, let's go to the 15-minute. Okay, so what happened? Look, let's draw our fib, top to bottom. Okay, this will be around ICT's OTE. Okay, we're in discount. This is premium. Okay, what happened in this range right here? Okay, we know this is the 4-hour order block range, so keep your eyes on this little range right here. What happened? We ran out this low right here. Okay, after we ran out this low right here, this was our stop hunt. What happened? Aggressive price action afterwards. Aggressive, very aggressive. We know this is a 4-hour order block. Okay, cool. Now that we understand that, right, let's mark it out. Let's refine a little bit. 4-hour order block. This is the 1 hour. I did want to see price come into this down candle, but I just marked out this whole range. And the reason why I didn't have to really mark out the whole range is because you can see you have an ICT breaker right here. Get out my face, bro. Okay, we have this ICT breaker right here, this up candle before the down move, right? This breaker. So I know like this whole range, these 3 down candles right here is a full order block, okay? But you could just mark out the breaker, right? And see what it does, okay? So once price came into here around New York session, right? 15 minutes after New York open, you have a buildup of liquidity. And if I was on the charts, I would have took this trade. And then you had mitigation right here to go higher. Okay, now a lot of people, they like to keep their stops tight. You could have put it on a breaker, but I specifically like to keep it below the lows just in case it wants to run lower into this order block right here. Okay, this is how you avoid unnecessary stop outs. You know what I'm saying? Just because you want a higher risk reward, is, you feel me, sometimes it's not worth it. Just, you know what I'm saying, because you're getting paid overtime by this type of move, and you have a higher win percentage. So right now, what would be our drawn liquidity? Okay, partials here, and then here would be our next set of partials. Okay, after that, next set of partials, right? We got a good amount out. We're looking for us to make higher highs. So that's the easy 1 to 7 right here. Not no 1 to 10s, not no 1 to 100s, 1 to 200s, none of that. You know what I'm saying? Just a 1 to 7. You know what I'm saying? Where partials take it. Over time, it doesn't matter. It's good to have a high risk reward. You want a high 1 to 10, 1 to 100. What am I saying? Blah, blah, blah. You want a 1 to 50 risk reward. Okay, that's fine. But guess what? You have to know that you're gonna take stop outs before you get that nice 1 to 50. But with this, right, you're just getting 1 to 4s. You know what I'm saying? Partials, 1 to 10s. You know what I'm saying? And then just keep partialing out. You know what I mean? When I tell you guys this, okay, everybody that I know that I seen from the beginning start trading SMC smart money concepts, right? They try to do these the same little Quasimodo breaker structure, RTO, and then try to get the 2 pip stop loss with 1, and then aim for 1 to 20s. I've seen all those people start going from 1 to 4s, 1 to 5s, 1 to 3s with partials. And then they just keep partialing out, and they just compound. You know what I mean? And they're consistent with that. I've seen so many people go straight to that. Almost everybody that's profitable now that I know with SMC, even me, I've done this. Try to get 1 to 10s, 1 to 20s, 1 to 30s. I've got 1 to 30s. I've gotten 1 to 20s, and I was profitable. But over time, I just from my psychology, my behavior, I'd rather just get 1 to 3s, 1 to 4s, 1 to 5s, partials, and then aim for 1 to 10s. You know what I mean? So, and then it doesn't matter really what type of stop loss I use, because I don't have a fixed lot. I calculate my lot. So I can have a 29-point stop loss and still aim for like a 1 to 3, 1 to 4. You know what I mean? It depends on the setup. So I'm sorry I went on a little tangent right there. I don't know if that was a tangent or not, but back to business. So yeah, what's the current draw liquidity? Yeah, these highs right here. Okay. So I think that's it. I think that's my approach right there. I gave you guys the entries, I gave you guys what I look for, but this is like the main two that you want to start off with. You want to start off with the structure and where is price potentially drawn to. Okay, where's the liquidity? You know what I mean? And then once you have this foundation, you can add anything you want to it. You understand premium and discount, right? You understand the higher time frame structure and market and the higher time. You understand the behavior and structure of the market, right? And then you understand where price and where is the potential on liquidity, on the draw. I said potential on liquidity. Where is the potential draw on liquidity? Okay, draw on liquidity. So once you understand these two, everything's set and good. You just have to keep adding to that, right? What's comfortable with you, right? I showed you what's kind of comfortable with me through this little approach right here. Okay, and this is how I go every day on my step-to-step. Before I start my analysis, not before I start my analysis, when I start my analysis, this is what I look for first. And then I start adding in the rest of my trading plan and how I'm going to enter and how, you know what I'm saying, what I'm going to do once price gets to certain places, right? So just understand these two and then build off of this right here. Okay, so with that being said, I think that's it. Like I said, I didn't want to make this video too long. It's probably longer than what I expected it to be. Yeah. So I hope you guys enjoyed this. If you did, go ahead and smash that like button. Share if you want to. If you really think somebody would benefit off of this, share this to them. You know what I mean? Also, comment. Tell me how you feel about this. Tell me, you know what I'm saying, if this is how you approach the market. Let me know. And, you know, everything's good. So I hope you guys enjoy the rest of your week. I might do a Zoom analysis tonight, so you guys stay tuned for that. Tonight, which is Sunday for me. So depending on when I upload this video, it might change. So yeah, let me stop talking because I know I'm talking too much. So I'm out. Peace.